Hello everyone, my name is Muhammad Al-Ghamdi and I am a student from Jubail Universal College. My major is accounting. Today I'm going to talk about managerial accounting and decisions making. Let us go to the first point, which is the difference between financial accounting and managerial accounting. Both functions are based on the principle of accounting. They service two completely different audiences with different needs of information. So, financial accounting. Financial accounting is considered with preparing reports that are decisions useful to external users such as shareholders and creditors. You follow a certain set of generally accepted accounting principles, which is GAAP, to prepare a certain set of financial statements for these external users, such as income statement, change in equity statement, financial position statement, cash flow statement. So, what is the meaning of managerial accounting? Managerial accounting is considered with disseminating information to internal users for decision-making purpose. Internal users include employees of any type of company in decision-making position. The scope of employee responsibility will transcribe the information and report required to help with the decision making. Because of this scope of reports and information is much wider within the managerial accounting function than the financial accounting function of a company. So the managerial accounting enable managers and other employees to make the best decisions possible based on the based on providing the best information possible. That's all I have to say about the difference between financial accounting and managerial accounting. Let us go to the second point, which is about managerial accounting for decisions making. To understand to understand what the managerial accounting does, we need to evaluate the decisions making process. We have 7 steps to affect the decisions making. First, identify the decisions. Second, we gather information. Then we identify alternative. 4, we weigh the evidence. Then we choose among alternatives. Then 6, we take action. Then we review your decisions, our decisions. So the managerial accounting information plays a major role in steps 2, 3, 4, 5, and 7. Without our information, decision makers would have a hard time evaluating alternatives as objectively as they possibly can. Managerial accounting has the ability to turn qualitative information into quantitative reports. For most people, it is much easier to evaluate numbers as opposite the qualitative. By being able to see how much a project is going to cost, how much revenues will guaranteed from different alternatives, what the effect on the bottom line a scenario will have, our decisions becomes easier to make. That is what the managerial accountant tries to do. Make the decisions making process as easy as it can be possible. There is another way to put how managerial accounting can add value is by evaluating the different roles managers function in a company. So it is planning. First, planning. The planning is the function of management where they set the company objectives. Now These objectives can be short or long-term objective. Company objective will differ from company to company because of the age, financial health, industry, economic condition, etc. Managers hope that carrying through and achieving their objectives will lead to value that added to the company, which can be seen through an increase in stock price. The objectives are mostly qualitative in nature. It is the duty of managerial accountant to turn these objectives into quantitative plans. And the second one, which is controlling. Controlling is the monitoring of a company financial performance to see if we are on track to achieving our object, and it is the duty of the managerial accountant to prepare a report that help to make it easy for the decision makers to see if we will achieve our objective, or we need to take corrective action. This can be done by comparing budgeted to actual information through various analyses. That's all I have to say about this part. Let us go to the next part, which is about also managerial accounting for decisions making. There is a sixth reason why management accounting is important for decisions making. The first reason, which is relevant costs analysis. The most important job of the management accountant is to conduct a relevant cost analysis to determine the existing expenses and give suggestions for the future activity. One question stands out here. How should I spend my budget? Before a company takes any action, it needs to explore all possibilities and figure out the best tactic to increase the profit. This means management accountants need to analyze different sales channels, products, services, and marketing activities in order to find the most profitable business model. Once the management accounting team is done with relevant cost analysis, you can make better and evidence-based decisions. Let us go to the second reason, which is audience targeting. Marketers must pay special attention to their consumers. They represent an author of a business. So each company has to create a buyer persona with all of the corresponding features such as age, gender, location, income level, lifestyle, personal values. But even if you define the average customer, there is still some work to do. Let us go to the third reason, which is make or buy evaluation. Product Product production is often the most expensive segment of the businesses. So, to be sure which option suit the needs of your company, generally there are two solutions for that. Make products on your own or buy them from the third party provider. In this case, management accountants are those who should tell you what to do. Let us go to the fourth reason, which is define budget. Nothing is random when it comes to budgeting. Budgeted related decisions must comply with your sales history and marketing database. This is where management accountant step in to analyze former activities and define investment for the future action. They create financial plans for cash for each department, project, marketing, new product, or any other undertaking. Let us go to the fifth reason, which is controlling, which is I discussed about, but we'll discuss again, which is controlling, is another important aspect of management accounting. Namely, it is evaluate the work of all company unit and makes conclusions related to the financial performance. That why, or that way, you get to learn the reasons for both the loss and profit generated by your department. Last reason, which is planning. The last benefit of management accounting comes from its potential to detect financial pattern and predict future development. It enables you to stay up to date with the last industry trends, which means you can react in timely manner and implement strategy that allow you to stay ahead and your shoulders above the competitors. With the planning power of management accounting, you can also create a long-term business policy. Doing so, you will make sure that the whole team stays on the same track and works informally towards achieving your business objectives. That's all I have to say. Thank you all for your attention. It is the end of the presentation. Thank you all for everything.